Is a stock which is up 15%, and even yesterday the stock had gained close to about 17 to 18%. Remember, the company announced yesterday that they will be making their own branded laptops and micro PCs, thereby opening up another revenue stream for the company. So it is an electronic manufacturing company. It's a contractor. It typically used to cater to make some telecom equipment, networking, but now they're getting into making their own branded laptops and micro PCs. And, this has fired up the stock over the last 2 days. Another one which stands out is Lemon Tree. So despite all the weakness in the broader markets, Lemon Tree is holding up quite smartly with a gain of close to about 4%. But to talk more about individual stocks the way forward, Devang Mehta, the Director of Equity Advisors at Spark Private Wealth Management, is joining in on the show. Devang, what have you made of this mid-cap and small-cap shakeout that we've seen?
Rima, thanks for having me on the show. And in fact, I was about to use that word. A little bit of shakeout was necessary, in fact, as a lot of times money making becomes so easy that there has to be certain gravity which has to be brought to the proceedings. So I think this is just that. Is the move that happened in the market, was it euphoric? I think no. Probably if you answer 2 or 3 questions, whether this is only liquidity led, the mid cap, small cap, as well as the large cap rally, which is right now going on in the market. The answer again is no. It's not only liquidity led. All markets are almost liquidity led, but sentiment for the equities as an asset class is superb. I think it's also earnings led rally. There are also cash flows which are coming to the proceedings and to the fore. Most importantly, the micro stability, political stability, whatever happened at G20, I think most of this right now are features that India is getting into the next orbit of growth, economic growth. So my sense is that the smaller corrections and abs will always be part of the structural bull run that we are going through. So I'm not much worried about the market. I think probably your emerging market leaders exist across the market cap spectrum, be it large cap, be it mid cap, or be it even small caps. So my sense is that yes, one needs to be a bit caution has to be raised on the valuation front. But overall, I don't think there is much downside here except for any Six Sigma event which nobody knows about. But I don't see a huge correction that should be on the anvil because of just 20,000 as a psychological mark being reached. It's just a milestone in the journey, according to me.
Okay, got that. Devang, thanks a lot for joining us. This is Pavitra. You were saying that maybe a little bit of a shakeout was necessary, but just focusing on the broader markets right now, the mid and small caps, do you think there are pockets within this space that are going to see, more of a shakeout come through? Because spaces like defense, like rail, have run up extremely fast and, valuations are quite staggering as well. So do you think there are pockets in which we're going to see sharp corrections such as these?
Yes, Pavitra. Naturally, so I think right now the focus should be more on the quality of businesses, be it large caps, be it mid caps or small caps. As you rightly said, as a basket, mid cap and small cap, are they a little expensively valued than the large caps? The answer is definitely yes. But whether there are individual pockets where there will be corrections, that is again, that remains to be seen, because either they are plain stories which are just going on in the market as a theme, whether railway is going to do well or defense is going to do well or PSUs are going to do well. Now, I think the P re-rating, the price to earning re-rating for these stocks have already happened. It is now whether the earnings are getting delivered, because I think most of these companies used to trade at 0.5, 0.6, 0.7 times price to book, or 10 times, 12 times price to earnings. Most of this expansion has happened. So most of these companies are now trading at around 2.5 price to book value and around 20, 25, 30 times price to earnings ratio. So I'm again not trying to generalize, but yes, there a little bit of shakeout can happen. But as I said, now focus will be rather on the quantity of earnings, of course, but also on the quality of earnings and the robustness of the business, and whether the capex driven business, which these companies are, whether that capex stays in the longer term, in the next 2-3 years, because bulk of the capex has been done. Private capex is coming back. Most of these companies will get re-rated now if they deliver on the earnings going forward.
Yeah, and it is this entire pack that has seen quite a bit of cool off today. But then, what is 6-7%, Devang, right? When stocks have rallied 200%. Today's day one. I think the next couple of sessions are going to be interesting, whether we'll start seeing sustained unwinding in names like RVNL, RITES, etc., or whether this is just a pause and then the momentum starts again. So, let's park aside the PSU basket. I mean, you've expressed your views there. If you were to put more money in mid caps, what themes would you still back?
Very good question, Surbi. In fact, on the mid cap side and even on the small cap side, there are interesting themes which are sort of emerging. I think you were just talking about the electronic manufacturing services just before my interview. I think that theme also is going to play out very well. If I can say, it's right now as an industry, it's just a bucket out of an ocean and even a drop in the bucket. It's an extremely small, the market cap collectively of all these companies would not be more than 12 to 15,000 crores, and it's going to be a huge industry. So we are looking at, if you look at dissect the market cap of India, 60 to 70 lakh crores would be banking and financial services. And if you go down the order, then there is, of course, oil and gas, and then pharma, FMCG, and capital goods. But there are so many industries which are still not, as an industry also, they are not as a large cap. So my sense is that there is a lot of money to be made in sort of power integration. There is energy management, there is energy integration. As a theme, I think a lot of MNC companies. Now, MNC companies are setting up shop in India and sort of giving it more capital and impetus because they know that the hub for growth will be India. They're making it, trying to make it a manufacturing hub. I'm no way saying that we are going to become the entire factory to the world, but we have been back office to the world. But a lot of these companies as an MNC theme also is doing very well because they are setting up a lot of factories in India and wanting to export from India as well as sell this as a domestic market as well. So I think this theme plus import substitution as a theme, that's also played out extremely well. And third theme, if I can mention, is, as I always talk about, capex and consumption. Discretionary consumption has started to do very well. And in that, when I talk about discretionary consumption, something like luxury goods, where there is premiumization happening. For example, a company like Maruti talks about selling hatchbacks 3 years back, 5 years back. Right now, we know that SUV is a bigger part of it, where there is premiumization happening. Plus, they command better margins in terms of that. So I think this trends, if one looks at, there are n number of opportunities in auto ancillaries, autos. There are mid-cap banks as well. There are mid-cap power integration type of companies or energy management type of companies, EMS companies. A lot of these themes can come to the fore.
All right, Devang, thanks a lot for joining us for that very enriching chat. Of course, we have seen a bit of a shakeout in the mid-caps, but like you pointed out, there are perhaps still pockets that you could look at within this space that could help you, with some good returns. But with that, we are going to get into a short break. I do want to point out that while the large caps have moved back over the 20,000 mark, the Nifty is back above that level. The mid-cap fall continues. So we're now seeing a near 900-point fall on the mid-cap index. It's almost 2% gone on that index once again. So it's come off the highs over there quite significantly. We are going to get into a short break, but on the other side,